to the RationalMister.com's Daily Brief. The answer to your question is learn the goddamn process, trade your trading plans, don't take too much risk on any one trade, and just let yourself get rich. Hello, everyone. Welcome back to the Frivolity. It is CPI Day. As you can see here, just a couple minutes past the top of the hour. I kind of, I think it's my autism / OCD. I kind of like to be get this thing going right around 9 o'clock. So, if anything, good to see we are on time. Actually, it was good to see people over on the YouTube page reciting 1980s lyrics. Actually, it'd be an interesting trivia question if anybody knows the song that Cotter is singing to us today. I don't know, who is that? Is that the Bengals? Oh, that's a long time ago. Anyway, see if anybody over there can knows what the heck your Tiffany. Oh, is that who it is? Tiffany? Yeah, goodness. Anyway, that reminds me of days. Actually, it's funny because Chris and I, Chris of course has his sporting the do-rag, so I love when he pops on the call and he doesn't have the do-rag going, because then it's all about Fletch. And actually, we were joking. Actually, isn't that interesting? A couple 1980s references. Fletch 6'5", 6'9" with afro. Chris is totally like that. It's cool. It's like literally he goes right off the screen when he doesn't have his do-rag on. Anyway, it's all good. So welcome back to the Frivolity. I suppose I can put that nonsense away. I did see that Twitter and ChatGPT were down here this morning. I don't know whether Alan's doing his frivolity or whatever. I couldn't retweet the stuff this morning, but I suppose maybe I can do that now. Let's see. Is this thing gonna work? Hey, look at that! It worked! Yay! Way to go! So anyway, we'll retweet that. And just FYI. Actually, my cohort over there at Coinigy, who's graciously running the Wednesday crypto shows for us, he just hopped on an airplane and he's staring at the back of a 737 or 757 seat for the next 6 hours as he flies from Portland to Boston. Wow, there's a flight for you. So we won't be doing the crypto show tonight. And my apologies. I do see Michael's here. In fact, probably in the after party, maybe we'll just spend time doing what I thought maybe we'd do. I was called away yesterday afternoon, and I wasn't able to make it back for the secret options formula show. But at the same time, too, with the CPI number coming out here this morning, I was like, I don't know whether I really want to make any big bets. And also, too, this is the first 2 weeks of the new quarter. So we do see quite a bit of position squaring. Fund managers moving money around the market. So I don't know whether I really wanted to, draw any big conclusions out of last night's meeting. So some of our OGs are away. We didn't have a meeting last night. My apologies to anybody who was expecting me there. Also, too, noticed, I'm not quite sure what's going on. Sjord has acknowledged it. He does have an assistant that he works with to sort of run this dashboard. For some reason, in the stock calculations, like if we look at the S&P 500, actually, I thought I just had this on here. Yeah, the S&P 500. For some reason, our stock engine right now, the slow breadth indicator is just parked, and it's doing this quite a bit recently. There's obviously an error in the code somewhere. Stuart did point out that he is trying to emulate the whole thing on the backside and trying to figure out where the hell the error is coming from. So my apologies to all the stock people who are using the breadth indicator, and it's extremely powerful when it works. But right now we're having a little bit of a snafu there. And you know, I mean, I don't think it's a huge thing to get too concerned about. I'll just quickly show you. Crypto breadth still pointing down. It operates off a completely different data set than the stock market. So obviously our vendor for the stock market data is screwing around with us here with some erroneous data. But crypto breadth, still not really that happy here. And of course, we had the CPI data here for June, I guess, come out here just about a few hours ago. And the whole market is just all over the map here. Um, and you can see Bitcoin is really getting its lunch handed to it here today. So not in a crypto trade right now. You know, based off the breadth indicator, it told us to actually get off on the sidelines there a week or so ago, which I think on balance is the right message. And look at Litecoin, you know, Litecoin and the whole sort of, I've talked to you guys about this before. I hope you guys are, you know, making note of this because it seems to be fairly consistent. I even think I even put out tweets and stuff to the effect about Litecoin and how it usually tops out about a month or so ahead of the halving event. And Ben, if you're out there watching, we'd love to have you come on a Friday show and talk us through your study. In essence, price of Litecoin basically hit Ben's objective and now is just stalled. So, what the hell happened today? Why are there so many damn squiggly lines all over the place? And squiggly lines are just absolute mess here today. As I like to show you, I have a normal routine and actually probably doing these free shows off the normal routine seems to work fairly well. So, you know, if we're going to do our boot camp, our day trader training program, what would I suggest you do? First and foremost, you know, probably a good idea just to build one of these simple overview spreadsheets and then create a whole bunch of trading plan outlines so you sort of have like a track record of what the heck it is you're doing and why you're doing it. But here we are, 12th of July, Wednesday, CPI day. Of course, we've been waiting for this for quite a while. I have been doing a bunch of work in the background, squaring up accounts and stuff like that. And I will officially say that I think I'm at the point where I don't really even need to do this website and stuff anymore. So this should be more fun than anything else. If anything, I want to just go and set up a couple annuities and they just spit out like indexed inflation monthly payments to me, and then I don't really care about money anymore. I think you guys get the impression I do this more for fun than for the actual like sort of profit off of this. And then of course, I hope you guys realize, you know, 35 years in the business. I think the very simple message is there are times when it's really easy to make a lot of money in the markets. And then there are times when it is damn difficult, to say the least. In fact, one guy that I used to always love to follow on CNBC, although we used to always make fun of him back when it was really small and it was just sort of net cable television. Um, there used to be this girl, and now I think she's on like Fox, and she's all, you know, I'm the anchor. What was her name? Barda Romo. Uh, I can't remember her first name. Anyway, Barda Romo, I think is her name. And then there's another guy who was a floor reporter, and he just sort of fancied himself Mr. Floor Reporter. Bob Pisani. I guess a couple good Italian names there for you. Anyway, and we used to call him Maria. There you go. Thank you, everybody. We used to call him Bobby Barterobo, and it used to piss him off to no end. Back when Ted David was on the show. And the old man, I think is dead now. God, I can't even remember his name now. That's forever ago. Anyway, so Bobby Barteromo, and of course, if he hears that, he gets all pissed off because my name's Bob Passetti, damn it. But anyway, Bobby Barteromo, he used to always say, and you know, it's just, I mean, stupid, silly anecdotes aside, really, really time tested principle. In bull markets, everyone makes money. In bear markets, no one makes money. And I gotta say that this feels like the latter, not the former. So anyway, it is what it is. So very, very choppy market. I suppose and actually, way to go. So 1% making our lives even more difficult. Trying to reconstruct our Fed studies, Fed spreads. It used to be called the TED spread a million years ago when it had absolutely nothing to do with the Fed. Of course, the Fed basically through that 2000 cartel of banksters, they basically just took over the economy. And for whatever it's worth, you thought you live in a democracy. Well, you don't. You live in an oligarch society, so get used to it. And the banking oligarchs, of course, they basically run the U.S. government now. In fact, actually, Joe Rogan, he was even saying once, he's like, I bet that all of these new presidents, when they're elected, they all come and they all have sort of stumps that, hey, I'm going to do this, I'm going to do that. Ronald Reagan was famous in the late 70s, early 80s. He was the governor of California, and he kept bitching and complaining about how, why don't we live within our means, and why are we spending more money than we have, and deficit spending and all that bullshit. And then all of a sudden, mysteriously, he gets elected president of the United States. Somebody mysteriously takes a poke at him. And he completely changes his tune. And he's a fan of voodoo economics, as George Bush Sr. Tried to label it. I guess just the point here is that the whole system is set up to serve the banking and the banksters and stuff. And as long as they have the government and our society now endorsing deficit spending, they basically own us. We live in a world of debt slavery. What I find interesting, though, is, and I don't think, like a huge portion of our audience doesn't even know where the hell Canada is on a map, which I don't blame you. It's so funny how Canadians think so highly of themselves, and we're so important in the world. But you go like 100 miles south of the border, and they don't even know where the hell the damn country of Canada is. So, anyway, we were joking in the lounge, right? And everybody, of course, talking about recession happening in the United States and all that. And frankly speaking, I don't see it. I don't think there will be a recession in the United States of America. I think they'll do perfectly fine. But a country like Canada, whoa, Nelly, there could be some trouble ahead for this silly little country. And the worst part about our society right now is that we live in a world of sound bites, right? And of course, Brian never says the right sound bite, so of course I have no viewers and followers and all that. But and I don't know where the hell they pull these people out of the woodwork and stuff for these commentaries. But the scuttlebutt right now, of course, and this is what pisses you off, right? Is economists say rate hikes are coming and the goal is to hurt people. Now that is actually stunningly irresponsible of you, Miss Economist. And this is what pisses you off. It always is like this, right? It's the ant versus the grasshopper. She is clearly a grasshopper, and frankly speaking, stunningly irresponsible. Because if you look at Canada, Canada's an absolute train wreck. No mention of reckless, irresponsible spending from the government. And of course, this is the same thing that's happened down in the States. Biden and all the socialists, what's that girl in the U.S. Congress that everybody's in love with, who was like basically a fucking communist. MMT, we can print and spend as much money as we want. Where the hell do these people come from? Anyway, so no mention from this economist about ridiculous substitute drama teacher spending. That's just, where did you go to economics school? Oh, well, actually, nobody teaches economics in drama class. Anyway, no mention of a bubble. If you can't identify what a bubble looks like, hop on a plane and come to Canada. This is absolute insanity. what's going on in my country right now. And the worst part about bubbles is when you're in a bubble, no, everybody's long. So the last thing in the world anybody wants to admit is that we're actually in the bubble. So that is one of the criteria, and of course this time it's different kind of crap through all that sickness manufactured society there. They actually con themselves into thinking that, hey, well, you know what, we can do any old damn thing we want. So uh, nobody's talking about, and if you just look at the simple numbers, how on earth are, and the worst part about it is they're actually blaming the inflation on immigrants coming to country. But if you're immigrating to Canada, then that must mean that your life is kind of shitty wherever it is you're coming from the world. You're not a millionaire. I mean, if you were a millionaire, why the fuck would you come to Canada? So clearly, there's a massive disconnect between just Joe's six pack in the streets and, what's it going to cost to actually just live in a home? And of course, the Klauses of the world believing their nonsense. They don't want any of us to own homes. They want us all just to rent for the rest of our lives. No mention of the insanity at the grocery store. I don't know what life is like for your average American at the grocery store, but it is absolutely embarrassing in this country. Chicken is considered a specialty meat. Well, not really. The reason why the price of chicken is through the roof is that the currency is worthless. Nobody's getting this. And, I mean, the worst part about this is that these woke talking heads, I wouldn't even be surprised if this lady actually works at like some sort of government agency or like a university or something like that, where she's tenured. She even probably has like a salary that's indexed to inflation. So she just doesn't even give a crap about the fact that they're completely destroying the value and the purchasing power of the currency because her salary just goes up commensurately. So that's the kind of phase we're in. And if you were going to look for a disaster around the world, I don't think you look at the United States. If anything, the fact that the Fed, and I think, I've told you this before, I think Jerry was embarrassed because actually I think Jerry by definition is actually a hard money guy. So I think he was completely and utterly embarrassed by these sort of woke, MMT economist kind of idea. And he bought into the idea, and basically the Americans are starting to get some religion about, the value of money and having to put the kibosh on the economy to slow this hyperinflation down. Anyway, we'll see how that goes. Specifically for today, as we've talked about, and I think on balance, we've walked you through this, so nobody should be surprised at all what's going on here. In fact, all I have to do is just type in the first few letters, and the exact same page keeps coming up here over and over and over. So I definitely think, think Klaus and great resets and all that kind of stuff. 2021 actually is very similar to 1941, 2022, 42, 2023, 43, et cetera, et cetera, et cetera. And you can see, in 2022, of course, did they blame it on the sickness? Did they blame it on, Putin and Eastern Europe? Do they blame it on supply chain management? How about the fact that China is basically imploding? But the point here is big inflation push here at the beginning of the decade. This is all about Klaus and his great reset, and they have to hyperinflate the money supply to justify the debt loads. And then when they hyperinflate the size of the money supply, then the old debt relative to the size of the new economy is manageable, and they can go and keep issuing more and more and more debt. That's what's really going on here. But you want to like sugarcoat it? Well, it's all about the sickness. Well, it's all about supply chain management. Oh, well, it's all about this guy over in Eastern Europe is causing problems in the food supply. Try not to buy into any of that. This is all to do with the banksters. It's 100% about them. Anyway, point of the matter here is we've talked about this at length, right? They sort of seem to get some sort of religion. The public starts a massive outcry. Keep in mind, these are American numbers. In a country like my country, like Canada, they're probably even 50% worse than this. But the point here is you can see how we started to work by time, and I would expect by the time we get to the middle of 2024, oh, gee whiz, there's going to be a US presidential election coming up at the end of 2024. They probably would like to encourage the US public to return the bankster friendly, because keep in mind, Woodrow Wilson, who was the guy who actually brought the Fed system into existence by allowing Congress to pass the legislation to authorize the construction of this cartel of banks that's perfectly legal. He was a Democrat president, and he actually left office, and he said that allowing the Federal Reserve to be built was the biggest mistake he made in his entire life. I might argue that you might actually even see the exact same thing out of Biden if he loses this upcoming election. But you can see that the Fedsters are going to try and bring the inflation problem into check so that by the time we actually get to the election date in November of 2024, the headlines are not going to be talking about how the currency is completely worthless and devalued and people's standard of living are getting absolutely destroyed. What's if anything, they're trying to set this up so that things look absolutely best, and Biden's going to come out and go, "Look at me! Look how awesome I am! Yeah, I'm the best. Reelect me." What's my name again? Do I have my diapers on? Oh, yeah. Okay, good. I'm good to go. And then look what happens once the new president is firmly in office. The banksters can start doing their shit again without having to worry about reprisals. And by 2000, or by probably 27 or so, we're right back in the crap. So, does it surprise us that now we're actually getting the data? Where's my fun little sheet here? That's showing that US inflation is falling back in line. No, I mean, this is exactly par for the course. This is exactly what should happen here. Stock market initially had a pretty big jump on the headline number. Interesting, I've suggested to you guys that you keep an eye on Japan and how Asia is doing. Asia is not very happy right now. If anything, I'm hearing the articles that I were reading is that the Foxconn situation over there in China is deteriorating, and China's kind of unraveling at the seams. So wouldn't surprise me if actually now obviously this was ahead of the CPI print. But usually we like to follow the direction that Asia, and you can see Shanghai was down, Sensex was down. So, actually Asian market not overly happy here today. Did have a fairly big jump on that inflation number report, but you can see they're kind of waning here a bit. Something just this is often what ends up happening on these big sort of news release event windows. Is the market moves violently right out of the gate, right on that big econ release. You get sort of a knee-jerk move, and ironically enough, usually it moves right into the European close, and I think that's exactly what happened here today. So here's the S&P 500 chart that I follow. There is the Euro close event. And ironically enough, I mean, and I do this, guys, with you guys on the public shows. Unfortunately, it kind of froze me out. I never got the opportunity to actually get a trade off here. But what do we say? Rising wedges are inherently what? Let's see if you guys over on YouTube know the answer to this. And I don't know, TBG's here, Hafid's here, Michael's here. I mean, take a screenshot of that, folks. Actually, it's actually pretty cliche. So not a big surprise that the market broke and came back down. I remember we were talking about this earlier that, China, Asia, Japan, they're not actually overly happy here. So I get the feeling that this was a bit of a liquidity push. Big headline number gets, obviously everybody's attention in pre-market, but are they just sort of doing things like running the stops and all that kind of fun talk? If we look at the daily chart, keep in mind, actually, and you can't even see this over here. If we just look at the continuous contract on the futures, we're trying to poke our head up here. If anything, getting a little bit nosebleedy, but we're not at new highs yet here. So a little bit concerned. We've come an awful long way here, eh? Probably would be better to do this chart up here, maybe even just fresh. ES1 exclamation mark. Can we get just a clean chart here? There we go. That's not bad. So, whenever I see a market that's moved this direction for this long, I mean, the pivot there was actually last fall, right? And they've just been grinding this thing up. What do you think the odds are that we're actually starting to paint things like divergence up here? Yep. All right, thank you, sir. So you can see this peak over here, a little bit lower than this peak here. So we know that we're in some technical trouble if we actually see momentum break down through these lows here. You can see we are painting lower highs here, even though price itself is painting higher highs. And this is where it gets dangerous because we've just broke to new highs here. And you can see the MACD histogram hasn't even gotten back to positive. You can also see the divergence in RSI, and this is our latest rally with the market moving to new highs, and the RSI not even remotely near new highs. We haven't confirmed this divergence yet. The confirmation will come on a break below this low here. So we haven't broken down, but I will say this is looking very, very dangerous. And of course, I built this specific indicator years ago just to try and keep me out of situations where I'm thinking about buying, maybe feeling a bit FOMO. And really, this is more about my clients when I was a retail broker. I used to have a client who was the captain. His name was Willie, and he was notorious for coming in and buying tops of markets. So that's why I called this a Willie. So anyway, point of the matter here is when this yellow line gets up top here, you really don't want to be a buyer. You want to really be a buyer when the yellow line is down in the oversold camp and, down here in October, September, October. And look at the beautiful bullish divergence here. I mean, this is where you want to think about buying. And sure enough, the proof of the pudding's in the eating, right? So this chart doesn't really fill me with a lot of confidence. I don't really like the idea of buying this market here. Very, very dangerous, I think. So, caveat emptor. I think the trade here today, ironically enough, was actually in the Dow of all things. So we're in that first 2 weeks part of the quarter. So we have to kind of ask ourselves, where is money flowing in the market? Obviously, we had a big update, but percentage wise, and actually, this would be an interesting trivia question for all you guys and girls out there. What's the percentage size move in the market where we go, whoa, you know what? We ought to pay attention to that. And the question I have for you is, are we anywhere near that? Or is this just sort of a meh, it's not really that big of an event day? So very good, Chris. Very good, Fuzzy. All right. So you can see, and then, add insult to injury, Japan was actually down on the day. China and Asia were down on the day. But this really isn't that big of an event here. As I said there a moment ago, the trade, I think today, although I missed it, which kind of sucks horse, what. I was tracking the ES here, hoping, and this is basically what I do. Had a nice 4-hour level come in here. I was very interested. Also, it was a perfect 4.669 level. So that was definitely an area to be hunting a trade location. But as you can see off the 3-minute chart, I didn't get anything. I had a rising wedge, which was sort of like, okay, well, this is probably going to resolve bearishly, and boom, there's the move. But as you can see, I just didn't get anything to work with. But look at the Dow. The Dow set up the prettiest little smiley smile right up here. And of course, you could argue that there's your rising wedge. Beautiful setup there, but unfortunately, I missed it. I was hunting, and this would be like the fade trade. And this is like totally my bread and butter. whenever I see markets come up into ATR levels, that's when I really want to pay attention. So the gold market was up there at ATR. Was interested in hunting this, didn't see anything set up. Crude oil was coming up into an interesting, had a POC, a naked POC, a gap level. A couple foggy boggies up here, trend line midpoint. So actually I was hunting a short up here, but man, they made this difficult today. So here was my trade attempt. And I, as a day trader, I think you really just you don't want to take opinions out of this. You just want to trade the setups and ride with the punches as they go. And if anything, this is a really good commentary on how difficult this market is. Remember, I was telling you about Bob Pisani, Bobby Bartiromo, bull markets, bear markets, who makes money. So this is a really good example where, technically speaking, I had a nice breakdown, had bear divs, drew my reload zones, wanted to try and get in off this fractal top, worked my order there at 78.6, was filled on the counter trend rally. Market sold off nicely. My target was things like 50% tags to the downside. At 50% of the anticipated move, I'm allowed to move my stop to scratch. And you can see it was like, hey, looking good, looking good, looking good. Then I get back and then, boom, bust me out, scratch. It's a trader's life. It's the way it goes. So if anything, really good lesson why we want to move stops to scratch at 50% of anticipated move. As you can see, what they were really doing here was they were going after the liquidity. They wanted to sucker me into the short side and then run me out on a stop run up top. So my end result of my day trading today was just a scratch day. No, it didn't make any money, didn't lose any money. But at least I'm an open book for you guys. Hopefully you see a consistent behavioral pattern out of me. As for things like Bitcoin, as you can see, and I sort of alluded to this earlier today, I think that the 1 month prior to Litecoin halving event peak is happening as we speak. Now you can actually look at this over time. We don't really have an M top working here as a V top, and they always seem to do this with this, which kind of drives me nuts because I'm like a market structure kind of guy. If I want to turn bearish, I want to see a big M here, but this was just straight up, straight down jerks. And ironically enough, actually into the Litecoin halving event, if they could actually just park it here now, and that would be perfectly fine for a typical Litecoin pre-halving event pump, and then just a pause once we for us to go through that halving event window, which I think technically is still over here. And they're still painting higher highs and higher lows. So as long as these lows hold in here on whatever this dump is, maybe just be patient. There was one gentleman who said, did you think Litecoin rally was over? And because I didn't have any M's, and I still think that there's some upside to go here, I was like, well, I don't really have any sell signals. I think I would just be patient and just keep waiting for things like 50% retracements. But clearly not a very happy camper here this morning. And I was kind of interested, considering that the stocks all sort of jumped up here, that things like Bitcoin kind of just stalled out. And I was a bit surprised, if we look at the lower time frames, if anything, a bit surprised, but the irony of it all is this is so damn cliche. It's ridiculous. If I just stick to the clothesline levels, oh, what a big surprise. We had a big happy face smile come in right through reload zones. I mean, that's exactly what's supposed to happen, isn't it? So really, there's not a big surprise to this price action, but it is kind of interesting that this is happening in crypto, especially this pretty well-defined fail there on Litecoin, which probably if we go through all the various different cryptos, we'll probably see that. But it was a bit of a surprise given the fact that the stock market appeared on first blush coming right out of the gate here this morning to be rather happy. Now, stock markets now are kind of waffling here a bit. And I also think, I talked to you guys about the first 2 week study, and we'll probably talk a little bit more about this in the after party show if I can somehow stop talking. here, but first 2 weeks of the quarter, not a bad idea for us to keep an eye on this. I don't know why more people in the market don't talk about this, but anyway, here we are, the 12th. So 14th will be officially first 2 weeks. 3rd to 12th, just even now. We should get a pretty good idea of what the hell these fund managers are doing with their money. We'll move this to July. There we go. So that's to today. And remember, we had saw earlier that the industrials were very strong, the energy was very strong, and we also saw that the basic materials were strong, like a week or so ago. And TRI's algos, the basic material ETFs were very, very bullish. And then we saw something really weird happen yesterday and the day before, where the materials sector came off quite a bit. So, we saw the gold market jump up there this morning. Woohoo! Look at it go. Look at silver taking off. Look at crude oil rallying, but kind of topping out. Remember, I said I was hunting a short there and I got stopped at scratch. It's trader's life. So I'm just wondering whether maybe that commodity upside move is resuming. Gold, silver going to be in the materials sector of the market. And so maybe that, into the last couple of days of this first 2 weeks reporting period, the gold and silver, and, we'll go look at some of the other materials that are in this materials ETF are going to have a big snapback rally. And, if energy is outperforming, if industrials are outperforming, which it appears, interesting how communication service is trying to perk up its head. But if this is where the fund managers kind of think we are in the economic cycle, materials, energy, industrials, that's early recovery, bull market. So, could we have a nice little rally here into September, October across the board? I think so. But it also means, too, that we probably should be expecting that the Fed's going to have to continue raising interest rates. And they will continue to raise. In fact, just even the data that was come out today, even though they said that the inflation numbers were soft, the consensus that I was reading was that, and I think it was this, the Fed's still going to have to be raising interest rates, and they figured that inflation is, even the headline, inflation isn't dead, but the insane push is probably behind us now. So the Fed's going to have to still, and somewhere in all this, they said that the Fed's probably still going to be raising here in July, which sort of alludes to the fact that I think that the Fed's going to be raising rates in the States, but I think that the effect will be felt most notably in the commodity countries like Canada, like Russia, like Australia, like South Africa. Not maybe to a lesser degree, things like Japan and Europe, but definitely the commodity countries. I think they're feeling it. And I was even tweeting out, like I said earlier, their comments about the Canadian economy. And what's really bothersome about these commodity countries is it appears that they all actually are living in denial. They just don't understand that because of that stupid bubble in China, that real estate bubble and all that, the endless buildings that were built but never finished and all that kind of crap, that this bubble has to unwind. And I think we're in the unwinding of the bubble phase. So things could get a little bit crazy out here for, international markets like Canada and Russia. But ironically enough, and I've said this a few times, and I'm just going to leave the video off of this today, I actually don't think that the United States is in that bad of a shape. It's other parts of the world that are in bigger trouble. But anyway, that's Brian's rant. Okay, let's leave it at that. We'll head on over and hang out in the after party. Maybe dig into those materials ETFs and see which ones are pushing the market around. Also, I think Michael had a couple of questions about different sectors, so maybe we'll take a look at that kind of stuff. All right. Have yourselves a great day. I hope you enjoyed the fact that looks like Larry Williams was correct. Inflation push is kind of behind us, but at the same time, too, Feds always go too far, do too much, go for too long. So I don't think that the sort of Fed rate hiking cycle is over. But we're getting close to it. And really, if anything, what we need to see is something out there in the world break in earnest, and then we'll know that the Fed is done and they'll start lowering interest rates in a panic. But I don't think we're there yet. Okay, have yourselves a great day. PMA for the win. Slow and steady wins the race. Maybe go a bit slow on crypto right now. Doesn't look like it's overly happy. And for heaven's sakes, don't chase. I think, if you are a gold bug, there will be better times to buy. Don't go and just market buy this market. That's just asking for trouble. All right. Have a great day. All the best, and bye for now.